Good afternoon, everyone. Philip from Blackpool Markets here. Hope you're all doing well. Hope you had a great weekend. So, start of the week for us. So, some of you it's still Sunday evening. So, we'll do another market analysis. We've got some of the old pairs we'll be looking at that we're sort of getting updates on. Another pair that we looked at last week is still sort of in a consolidating within a channel. So, we won't have a look at that. We'll notify you again once it looks like it's going to start to break out. So, we've added also some new ones onto this sort of update. Couple of go through. We've also got the pound. My colleague has just done a video on the Brexit, so have a look at that. It's all about the fundamentals, what you should be looking out for, and if you're more of a technical trader, what you should be. It's always good to sort of just have an idea of what's going on in the fundamental side of things as well. But coming back to the market update, so we're starting off again with our Aussie Japanese yen. So you can see this on the 4-hourly time frame. You can see it broke past that support we've had. Also with a gap down this morning with the market open, went past that low now on the hourly chart that we have here. So again, keeping in mind that it has filled this gap we had here previously at the start of the week of last week. So just be wary of this gap. Depending on how this candle closes, you can decide from there. But in my opinion, I would wait for this candle to finish on the 4-hourly or even perhaps the daily, just to see what's sort of going on. With that, and then moving on to our Brent. So Brent is also still moving, so we have a look at that. You can see it is still sort of having a problem to go past this resistance it's broken through. So it is testing and testing. I'll give you guys a bit of a zoom here, so you can see it's made all these wicks trying to push past this resistance level. So it could possibly look to go further down. Also here, just quickly show here on the daily, we can see that of wave 1. So that is hopefully will create a support for us, and we can see a possible consolidation within the zone. So just look for a sideways movement here as an option. So we could spend some time between this $57 to $60 a barrel, just until it breaks out. We could look for potential moves further to the up or to the downside. Keeping in mind that this is reached our previous wave 4, so this could be the end of this correction to move upwards, even though it has been a really strong correction. But other than that, if it does break further to the downside, we can look for it to correct this move even further, as it was a 5-wave structure, so it can go past this wave 1 over here. So if it does break this support area, do look for a strong move to the downside, as this previous wave we had over here was quite strong. And also Trump putting pressure on OPEC as well, so we just keep an eye on that. If it does go past, if it does break to the top side, we could look for our resistance areas for potential take profits if you were looking to trade it to the upside, here on this wave 3 and this internal wave 3, and obviously also our high over here. So once it breaks past that, we could look for a very nice home run to the top side. So there is a good way for it to go further down or to the upside. So just keep an eye on this. Also, just to remind you guys, this wave 3 is a very strong resistance area. As you can see here, we've had that wave 3 and also there's a wave 4 correct on it. So very strong potential resistance area. So just keep that in mind. Moving on to our Canadian dollar Swiss franc. So here we have on the daily time frame. So we were looking at this head and shoulders pattern that has formed. You can see it has sort of made that wick break past that, false breakouts, and then turn to the top side with another big wick. Using here on the 4-hour, you can see using this resistance area. So possible consolidation before we see a move to the could be to the top side, as it is a very nice head and shoulders pattern. So you can see we've had a bit of consolidation here on the head. But so if it does break this area, it could go to the upside. There's a bit of a bias because obviously the head and shoulders pattern, we've also had that resistance here, support here previously. So if it breaks to the downside, we could look for this low of the head to be a potential support area as well. If it does break past that, we can have a look at the weekly. So this we have here, you can see it's actually quite a strong, could be a very strong key area for support. It is quite close to that line. We can even attach it over here and sort of pull it. There we go. So it's a very strong area for support. So there's it is consolidating to the sideways, so it is quite strong. Either way, we can look to go either way. If it does break to the top side, we could look for this neckline, I would say right about here. Not minding that false breakout too much. You can see we've had previous touches on this neckline. So this is a very strong key level to look for if it does. I would say if it breaks past this consolidation zone over here that we've had on the 4 hour and on the daily. But you can see it as when it does break past, we do have quite some movement up all the way up to there of about 200 pips, so 2,000 points. So we can just have but just keep in mind we can also look for potential take profit targets of all these areas over here. I would say maybe this one would be a bit better because we have had that touch and also this previous support over here. So there and there, and then obviously that resistance, there's some more support back there. So that is, if we go to the top side, very good potential levels to look for take profits. If we go to the downside, not as much movement. You can see we do have maybe, I would say about 600, so 60 pips for a move to the downside. Moving on to our Euro Canadian dollar. So obviously the Euro and the pound pairs will be have a little bit of unsurety in them because it is coming closer to that Brexit decision. So just here, so you can see we were looking at this trend line that we've had to the downside. So it has now broken it, did a bit of a retest with that wick. So it's a daily time frame. Moving to the 4 hourly, I'll show you. So you can see it was actually a very nice retest, very good candle pattern. So that could have been a very nice potential entry. I wouldn't look for further entries depending on how long you want to keep the trade and what your risk is. It is quite a big stop loss. So just be wary because we have actually used this previous section over here. You can see resistance, support, more support, bit of resistance there, more resistance. So it has come quite close to it. So it is a very strong resistance area. So possible consolidation like we have had previously here. You can see we've had a bit of a move between these two lines here as well. So just be wary of that. If it does break out, obviously we can look for these other resistance areas for possible breakouts or take profit zones. You can see here we've had support to resistance, so that is quite a strong level as well here, about 1.54644. So if it does break past, look for that. If it does break to the downside, obviously our support areas will be also relevant to our possible take profit areas, and obviously these lows over here. So if the lines are quite close to each other, we could look for possible consolidation. But if you want to like shorter time frame trades, they could offer very good profitable trades. As we know, if your stop loss is smaller, you can possibly look at upping your lot sizes as well. Just purely because you're risking less essentially. So you can up your lot size to fit your percentage risk if you are looking to risk on a percentage basis. Moving on to our Euro GBP. So this should be a lot of unsurety in this, as there is. You can see it has sort of really made this sideways movement. So I've got a bit of an Elliott wave analysis here, not too detailed. It does seem to have a wave A and a wave B for a triangle. So you can see wave E has overshot this trend line. I'll just quickly extend it a bit for you. Use this. This is the lower. It does look quite close. So, but this one is lower than this point over here. So it has overshot it. So that's always a good indication that a strong move is about to occur. And we can also use our post triangle thrust measurement to measure that. Measure the possible move to the upside. We can also measure the previous wave over here. So I'll quickly show you how to do that. So for a post triangle thrust measurement, we want to measure the widest part of our triangle, sorry. So that would be this section over here where the A wave starts. So that is the widest part. We get a Fibonacci measurement here. So we'll quickly measure here. So you take it from the widest part here, and you pull it to the end of wave E. Let's quickly ray it as well. Cool. So you can see now we're looking for about 100% of this move. So we can look for that for right over here, which is actually quite close to the high. So this, I would say, would be the minimum if it does break to the top side. And then obviously if we want to measure the previous wave as well, we can use that too. So I'll just quickly delete this line for you. So now we can measure this previous wave. So we measure from the start of wave 1. So you can see that is wave 1 as it is the low point. Wave 2 came pretty close to taking it out. So it didn't break any rules. So we quickly measure we measure the length of this whole wave, and again from the start of wave E. You can see here on 61.8 would be a potential target, and then obviously our 100% would be a good target as well. So these are the potential 3 targets I would look for if it does break to the top side. So we've got here on, it's a good move. So we've got here on 0.98892, 1.03226, and the 100% of 1.13507, around about those areas. What we could also look for, if you do take a trade now, you could look to put your stop loss possibly below the wave C. As we know, wave E, if it does take out wave C, your triangle has been invalidated, so that will break an Elliott wave rule. So if it does go past that, we can look for different counts. This is also a very strong, I would say, potential double top or multiple top as well for a trade. We'll just quickly get rid of this as well. No, but if it breaks to the downside, if you want to trade it like a normal symmetrical triangle for your just normal technical analysis, you can do so as well, using this over here. So if it breaks to the downside, we can look for possible moves, either way using these previous support and resistance areas as potential take profit targets. But you can, if you want to be a bit more safer to the upside, you can wait for a break of this trend line or even the break of that high, which is pretty close to our first target. So, but just be, when you do take a trade, just be very good at managing it. So don't be too greedy. Well, don't be greedy at all when you take trades. So if it reaches your take profit targets, close the trade and be happy with what you have gotten. We don't want to push for too much, because then you're essentially just risking more than you need to. Moving on to our pound dollar. So we're looking at cable now. Obviously, we're looking for a very violent move because of the Brexit announcements that is coming up soon. You can see here on the daily bar chart, we've had this double bottom. So technical analysis is still quite valid. We can even look at it as a flat bottom triangle connecting these points over here. Not the prettiest one, but it could still be a potential flat bottom triangle if we want to take it into account for the top side. Or you could just trade it as a normal double bottom and use these as your potential take profit targets. So quite a lot of movement to expect. You can see we've had on the hourly, I'll quickly show you, we've had a gap to the downside. It is busy filling that gap as it usually does. I would say just be wary if you are going to trade it. Keep in mind that Brexit is coming up soon, so be very careful, please, when you are trading any pound pairs. We don't want to see any damage done. So, and then also if it does break further to the downside, we can look for this ultimate low that we've had. You can see here on the weekly bar chart, but do keep in mind this is a very strong support. We've come close. There was a close touch there as a support. We've had resistance having here, more support. Obviously that support over here again with a wick, and then coming down for that support section. So it looks like it's testing it again. Made a nice little doji there. So just be wary when you do trade the pound pairs. Keep an eye on. We don't want any restless nights. So moving on to our last pair, which is the Kiwi dollar. So Kiwi dollar again looks like it could potentially look for another weaker move to the downside coming Christmas time. As you can see, we've had here this pattern over here has a very nice head and shoulders. Shoulders are quite small, but you can see it has been a very strong support level. Obviously that gap as well has happened. So we've got that top, had a top again, broke past the top with a big gap, went up a bit and filled that gap again. So that used it as a shoulder as well. So we're coming close to that neckline over here again. So it is sort of testing it. We could see a possible consolidation. It's not a very good looking head and shoulders, but it is still nonetheless following the pattern quite nicely. You can see shoulder with a neckline, a bit of a consolidation between these zones, and then obviously came up in another bit of consolidation. So just look for that. If you are going to trade it, I'd wait for a break of either one of these support or resistance areas. So to the top, obviously the support resistance, and to the bottom, obviously the supports. So if you're looking to trade it to the downside, we could look for potential take profits over here, which offered us that previous resistance, bit of support. We can see some more support over here, there, bit of resistance over here, consolidating along that area. And then also if it goes further low, that section over here, we'll do a third one as well, which is this support over here. So that is for the downside. If you're looking to the upside, obviously that high we've had could be a key area for take profit targets. We'll just get quickly, so this is the high we've had. We're looking for the break of that consolidation, and obviously once it breaks that one, we can look for this that was a resistance to turn into a support, sorry, into another resistance. So this resistance back to resistance for another area of take profit. So you can see where we are now is actually also offered a previous support as well. So you can see that's the section we were here. So we've had that head and shoulders pattern here. Obviously we've had that support section, bit of consolidation as well. You can see again here resistance, resistance, another support and support. So a very strong area we are now, very key level. So if it does break, we can look obviously for the moves further to the downside. To the top we've got these levels as well. So that was it for it. Quite a bit of a long video for about 15-16 minutes. So I hope you guys did enjoy it. Start of the week is looking like there's a lot of good patterns. It's quite interesting because the markets have not really slowed down too much. They have gone a bit quieter, a bit more consolidating, but nonetheless there are still very good patterns. News is still going quite strong with, like I said, Brexit coming up. Looks like now with the CEO of Huawei being arrested in Canada, so we'll see what happens with that. China is not very happy about that, just as the trade war with China and USA sort of calmed down a bit. That happened, so that spiked things up again. So bit of a hectic month for us this in December. So people have taken a break now, so they're probably more at ease now. But if you're looking to trade, do keep all these fundamental things in mind. I don't usually trade the fundamentals. I just have them in the back of my head to sort of decide when not to trade or when to manage my trades a bit better. So obviously Brexit is coming up. I will look to just manage my trades a bit better, possibly not even looking at taking any trades. It is a very risky time to trade, but if you're going to trade news, just keep in mind of the spread. Markets will move very volatile moves in the market, so also volume could go quite low, so just be very wary of that. But that is it for this video, guys. I hope you guys did enjoy it. Start of the week. And from everyone here at Blackpool Markets, thanks very much for watching. Safe trading.